So you're kidding me, right? You're kidding me. Mortgage rates are almost back to 7%. Now, I'm not laughing about it, but we were just at 5.9 about 30 days ago. What in the world is going on other than the debt ceiling, banks crashing, and mainstream media just telling us every day that the world's going to end? So today we're going to talk about what's going on with mortgage rates, but I have one sector of the market that's doing actually really, really well. And it might surprise you guys because it is involved with real estate. What is it? Well, let's get over to this. Right now, we're seeing multifamily built for rent shares remain elevated. They continue to build more and more and more homes just for rental purposes. Well, why? Well, the first thing I want to show you is I want to show you how the disparity is in these. So here's how, right through here, you're going to see kind of the reddish, maroonish grid right here. These are multifamily homes being started, okay? The ones in the blue are multifamily homes for rentals, purely rentals. They're investment properties being built. Look at the differences here. It's a huge amount of money, huge amount of inventory. So more and more and more people are diving into the rental market and the investment properties. Well, why? What are we missing here? Well, what you're missing here is right here. These are what rents are doing. Now, a lot of people are saying, well, rents aren't moving. The rents in my neighborhood aren't moving. Well, guys, you got to get out of the bubble a little bit. Get out from under the rock and look at the whole country. Are you in New York? Well, probably not. And if you are, you probably saw your rents going up about 30%. Okay, if you're down here in Texas, El Paso, Texas, you're probably seeing your rents go up, what is this, 18%? Okay, and then you're going to say, well, Dan, this is rents.com, so they're going to skew these numbers. Well, no, this is USA Today. Let's go over to Credit Karma. Credit Karma, they actually have, how much rents are going up. So from 2021 to 2022, here's the list of where rental prices have gone to. Florida, up 22%. Tennessee, up 18%. South Dakota, 18%. New York, 18%. North Carolina, 18%. Rhode Island, 17%. It goes on and on. Look at the double digits. So that's what's going on. So far in 2023, just from March to April, on average, rents went up 0.6%. When can this end, folks? So let me explain why this is happening. Well, the why it's happening is right here. If I bought an investment property, let's say I bought one 3, 4, 5 years ago. Think about it. I bought it and my rate was 5 or 6%. Then I refinanced 2 years ago at 4%. So now I'm basically locked in on my payment for 30 years. Now, a lot of people make it sound like, well, you could buy a property and then within a year or two, you probably can't afford that payment. Well, why wouldn't you be able to afford that payment? Well, your taxes are probably going to go up a little bit because it's based on the home value. So you want the taxes, I hate to say it this way, to go up a little bit because if it's just stagnant, their house value isn't really moving. So on average, house prices over history have gone up about 4.4% a year. So your taxes are going to gradually move up a little bit. It's nothing in the tune of 30% a year. Same thing with your homeowner's insurance. Your homeowner's insurance is probably going to tick up a little bit every year. It might tick up a lot if you're in Florida. I realize that, but I still love it. I still have cash flow. I'm still good. Okay. How do I get cash flow? Because I'm in the catbird seat. If I own the property, I control what the rents I can get on these things. So I can get double-digit returns on my rentals. You can see it there and there. And please comment down below. Give me some links that might counter this. I'd love for you to do that so you can educate me. That's why this is going on. Okay, so if you buy a rental property, you don't have to worry about this. Now, if you're also sitting on the sidelines, you're experiencing these kind of returns too. You're experiencing the other side of the fence. You're having your rents going up year after year after year. So that's what's going on in the rental market. So if you're sitting on the sidelines, God bless you. But don't be surprised if your rents continue to go up month after month, year after year. Okay, so that's on that side of the front. The next thing we want to go over is the economic data. What in the economy, what's going on right now other than the debt ceiling and the bank closures? What's going on that's actually affecting the markets? Well, we have today, which is Tuesday, we have building permits. Now, this is the area where I keep saying we need more and more homes being built because existing home sales are really dismal. And so we have to rely on new home or new construction houses. So we go down through here and we see building permits. They're down from where they were. Previously, reading was 1.4 million. It was expected to say around 1.4 million. Now it's 1.1 million. All right. We have down through here new home sales. Now they just blew the lid off. And this is the area that we really need to kind of these numbers to uptick. We need new homes or new construction homes. We need that inventory to build to save you guys from these double-digit rent increases. Okay, so that's what's going on in the economics right now. Thursday and Friday is a lot of information coming in. We have on Thursday GDP, initial jobless claims, and pending home sales. And then on Friday, drum roll, please, we have the number one indicator that the Federal Reserve monitors in regards to inflation, and that's the PCE. So that is coming out on Friday. That number is going to move the markets one way or another. I can bet you on that one. So what in the world's going on with mortgage rates right now? So here's the screen that I see on a daily basis. And here it is. You're seeing the bond markets and the MBS markets. So why do I watch these things? Well, folks, I'm a mortgage advisor. If you're out there and you're trying to get pre-qualified for a house, or how much my house can I really get qualified for? Maybe you need a home equity loan. You kind of are landlocked in your property, and I mean that in a good way, and because I'm in that situation as well. But I have a rate on my home that's so low, but I'd like to tap in some equity. How do I do that? Well, with a home equity loan, we can help you there as well. Or you know what I've been getting a lot of phone calls from recently is reverse mortgages. Because why? We discount a lot of the fees when it comes to reverse mortgages. I got 2 quotes yesterday. One person was being charged $33,000. And the other one was being charged $21,000. They came to me, and I'm going to waive a bunch of their fees. And one of the clients, I was able to save $6,000 just by waiving one fee. So if you're out there looking for a reverse mortgage, would love to help you there as well. So what's going on with mortgage rates? Well, the first thing we want to look at is we don't want to look at the 10-year Treasury, because why? We have the MBS market. What's the MBS market? Well, it's a mortgage-backed security bond that trades on Wall Street. That's yield is actually the biggest component of your mortgage rate. So what this is telling us is the MBS, the mortgage-backed security bond, is trading at 99.75 right now, or 73 right now. That's the price, and it's down 0.11. What that means is, all I need you to know is this. If the number is down, that means rates are going up. There's a flip-flop effect. So the number's down, rates are going up. The number's up, rates are going down. The bigger the number up or down, well, the bigger the adjustment. Where are rates right now? Guys, we're teetering on 7% again. So a lot of things that's happening right now is the debt ceiling. Trust me, it will be resolved, but you're going to see huge volatility right now. Once it's resolved, you can see mortgage rates probably tick down. It could be a pretty substantial tick down, and you're going to see the stock market really, really rally. That's what I'm expecting there. So if you're out in the market and you're like, hey, Dan, how do I get a hold of you and your team? The best way to do is just go to therateupdate.com. Here it is. And you're going to find out a ton of information here. We got tools, calculators, everything you need. And if you speak Spanish, we have a plugin right here that you just click that and everything will turn into Spanish. How do you get a hold of us? Well, there's 2 ways. Actually 3 ways. One, give us a call, 844-775-5626, or you can apply now right over here. Or you can schedule a consultation down below. If you're like, I don't really want to apply because I have a lot of questions and things like that, well, then schedule a one-on-one consultation down below. One click of the button will either call you or Zoom you at the time you choose. It'll just be a one-on-one to answer any questions that you have. So thank you so much for watching, guys. Have a fantastic day, and I'll see you tomorrow. Bye-bye.